Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thank you. And how we do it in YouTube. And if you're in YouTube, welcome to the Traders Lab. Thanks for stopping by today. Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. This stream's about the business of trading, and it's also based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. And that is so you can potentially save some time and have something to work with so you can reverse engineer it and determine if you can establish a statistical edge. The business of trading, in my opinion, and based on my experience, both professionally and otherwise, going on 46 years. So you might say I've done everything you've done probably, and probably a lot more, is a gaming-based business, and that's a business model. It's very successful for casinos. So in the trading business, if we can realign our processes or our belief system to what this business is versus what we might imagine it to be, we may have an opportunity then to replicate a proven business process. And of course, as they say, past performance is not indicative of future results, and you have to bet everything. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades, and you need to vet those for yourself. Also, we work in the Trader Lab on statistical probabilities. Again, how do the casinos operate? Statistical probabilities. And yes, they do pay the gamblers. However, the difference between a gambler and the house is the house only gets involved with the other side, or with the gamblers, if you will, or other participants when they have a statistical edge. The house is not concerned about whether or not they pay the gamblers. They accept that they are going to pay the gamblers because every business has cost of production and overhead. So we take stops. We don't like it. I don't like paying bills. Of course not. But in business, we have to pay our overhead. So if we have an edge, and it's a proven edge, and we have the psychological ability to actually execute the edge, that means manage our fear and FOMO and all the other psychological aspect that disrupt our ability to extract, or I should say execute, that edge. Then we have the opportunity to sit with the casino and extract the dollars from the gamblers. That's the basis of our business. And of course, you have to develop what works for you. Trader Lab might be able to help you with that. And of course, you've got to do the work. There is no plug and play. There is no indicator and time frame, and somehow you create an edge. But you will always have winning trades. That, to me, is the fallacy and keeps most retail traders from understanding the business they're trying to be in. By the way, the structured trades look like this. There's 60 PDFs of these. These go back to 2020. These are actual trades, also screenshots. I'm not a vendor. There is no cost for this. There's a link in the bottom of YouTube. You can download these. Now, what do you do with these? It is not plug and play. If you try plug and play and think mechanically, not good. Your potential for sustainability, I believe, will not be good. Now, let's look at the past couple days. This is your standard market profile, volume profile structure. Now, the thing about the market, at least in my experience, now I'm going to go into a couple of things here with you. Actually, one thing I want to do first is the main driver of all of this is something called context. Context is about the condition of the market. Now, I think based on what we know, the trend is up, right? Well, if you're in a daily time frame, then your trend is up. However, what happens if in a shorter term time frame, and I'm using the term time loosely, that we get profit taking? Well, what does that mean for you? Does that mean you take profits? Does it mean if you're a day trader, you take a short? Or does it mean you just stand aside and then look for continuation longs? What is the right answer for you? This is where we all get scrambled because we don't know what kind of trader we are. We haven't found out what actually aligns with us psychologically. And that's really, I think, remember, what is the element that's most difficult for us? I always mention this. It's the psychological, the fear, the impediments, and that also is linked to time frame or fractal, depending how you look at it. So we opened inside of yesterday's range, and the open's right where that little zero is. That's the open. So we're inside of range, and this brown box over here is called value. Value is where 70% of the volume took place yesterday. So it's basically one standard deviation. And this brown line here is the retail price from yesterday. So we have yesterday's high, we have targets above us, which are open, and we have the ETH high is right below this, and we have our ETH low under here, and this is called a low volume node. So I posted early this morning, and by the way, posting doesn't mean anything. I'm not right, I'm not wrong, I'm just like you. I get some right, some wrong, and it's not even a right or wrong, it's just probabilities of this one thing happening over the other, and attempting to get in alignment. But here's the key piece. We opened in range, in value, and what that suggests is that the market's in balance. That means we kind of found a spot we like. Like, oh, okay, let's hang out here for a while. Well, what does that suggest? At the moment, a low conviction day and rotational trade is and at the moment, now the thing about this is just at the open. Now, if we open in value, in range, and we opened, because yesterday's settlement was over in this area, then we have the following probabilities. And I'm spending some time, and you have to vet everything for yourself, because this is what a trade plan is about. And this is what auction market theory is about. Auction market theory is shopping. You know, I like to sell high. I don't know about you. And I like to buy low and throw 5 in the cart. Retail is where everybody does business. Well, if you're a good shopper or a good trader, and by good means, if you understand valuation and why the market rotates, then you'll understand that if the market is long, we can get responsive sellers or profit taking. You also know, if we think the trend is up, that you might use that selling to get long to come back up here and out the top. So now we have what's called continuation trades. How do you sort that out? Well, you have a plan. And then when the trade shows up and you show up, you put the trade on. And how do you know whether or not to put the trade on? This is the dilemma we have. Uncertainty. Can you accept, think about this, that the market is 100% random 100% of the time? Now, most of us think it's very predictable. It's going to go here. It's going to do that. Well, I've kind of replaced that with it might do this, it might do that, and where it might do it. And then if I see a triggering structure in order flow or price action or something I have vetted, then my job is to put the trade on and accept my fear and uncertainty, because I can't be certain. If I can't be certain, I have to have something else. What creates probability and never certainty? It's called statistical edge. Edge is tangible. You can touch it. No edge is only randomness, uncertainty, and fear. And what controls us when we have fear is our primal wiring, not our intentionality. The way to manage fear, in my opinion, and of course you have to vet this and determine how you can accomplish that, is to know that when I put a trade on, even though I don't know the outcome, because it's always going to be random, that I have a statistical edge and I can touch it. It's tangible. When you don't have something tangible, all you have is emotional stimulus. And emotional triggers are fight and flight, bailing out, not taking the trade, paralysis, all that. And this is what we address at Trader Lab. So why are we looking for a short? Here's the statistics, and you got to vet these. Taking out the first hour's high or low, when we open higher in range, in balance, is approximately a 97% probability. Past performance, again, not indicative of future results. Taking out the ETH high or low, about a 93% probability. Getting to the ETH volume point of control, and I'll show you these on Bookmap, is about 82%-ish. Getting to the previous value area high, which was there, right there, is about a 70% probability. Getting to settlement, about a 69% probability. And let's see. Previous value area low, about 58% probability, which is there. However, what happened here? What happened yesterday was the market opened, did a little dipsy doodle, and then we opened in value, and then we rejected it. And then we established new value, which means the market is in an uptrend going higher, and we'll catch you later. What else do we know? If we have higher value, where are the stops at an outside edge? So I posted this morning somewhere around here that our target was, 92, 93 for the shorts, and that it was outside in trading and then back inside. Now I'm going to show you a structured trade. So you guys have questions, post them, and I can't see your questions while we're hanging out together here. I got to look up. So I'm going to look. Do you have questions, and how are we doing? Please give a like. Thanks, Lucky. If you're in YouTube, I hope you're getting something out of this. This is Trader Lab. Thanks, everybody. And please give a like. And remember, the Trader Lab is open to everybody. If you're visiting in YouTube, feel free. There's no cost. So what do we know? Value area high. The volume point of control from yesterday. Remember shopping. This is the outside edge. Retail. We have, I got to get some stuff off my screen here because it's current. You don't want current. We got to start with, hold on. Gotta push a few buttons in Investor RT. Make sure everything is the way it should be. Hold on. Some of the levels that are on my chart right now, HVN, you see that LVN, those are for the current market. They're not for this, because these are being exported off my trading workstation. This is strictly for streaming. So RTH open at 8:30 RTH Central Time, I should say, RTH open. So what do we know? Let's talk about what we know. What do we know? We know the ETH high is here. We know yesterday's high is here. There's going to be stops up here. We have a week high sitting at 28. That's a target for longs. ETH high is a high probability target. And yesterday's value area high. So I'm looking for shorts. Maybe. Unless we just, blast through. So let's see what it does. Liquidity in the book, liquidity. So when the market opens on top of yesterday's retail price, then I can anticipate two-sided trade. Doesn't mean it could just open here and keep going. This is part of the thrill. So let's watch. Let's now narrate the market. This is called VPOC migration. I made these terms up when I started doing this many, many, many years ago because I was trying to figure out what does it mean. And if you think of the market behavior as a foreign language, which is how I experience it, if I can learn to read the behavior, I'm now in real time. I'm not dealing with lagging indicators, conflict, none of that. And I still take stops. So let's not think that we can avoid overhead, but maybe what we can do is we combine order flow with an understanding of market mechanics and interpret it ourselves. Maybe we can enter and exit more timely. Maybe we'll have better execution. Maybe we'll have better, trade management and all that. So what I found is, we all grow up on indicators, of course, and that's all wonderful, except what does the indicator have to do with the condition of the market? Nothing. And what does the indicator have to do with execution? Does this say get long here? What is it telling you? Well, the indicator is a translator. Think of it as Google Translate, and you probably have multiple Google Translates open in multiple time frames at the same time. Well, how do you sort out the noise when you don't know what the condition of the market is? You're depending on the translator to tell you a condition. Well, subject to your time frame or fractal, the trend is up. Does that mean you only take longs? Yeah, maybe. Or does it mean as a day trader you can take longs and shorts? It's all a function of your plan. So for me, right here, what do I see? I see some selling, and now my buyers are above my sellers. This is my early retail price, and I call this VPOC migration. It is the first indication of participant behavior. At the moment, this is too low. I see my liquidity coming in here. I've got resting liquidity sitting over here, and I have liquidity up here. And I think I had another level someplace up here. Let me just look. Don't see it. I got to put something else in here. 58.93. This 50, and you'll see where this all comes from. I got to put it in here. This is that low volume node that I show you at the top of the stream, and this is the outside edge of the distribution from yesterday. So what I'm doing as a day trader is I'm looking at the structure of the market and where we found too low yesterday. So what I know is I can come out to that area, pick stops, and if there's absorption down here, then I can come all the way back here, and then the trend continues, maybe. So let's come back. So VPOC migration, it says to me, maybe going up. Retail price from yesterday, I'm in a fair area. I don't want to trade here. I want to trade outside in, and I don't know anything other than where I opened, in range, in value, with settlement below me. And I know I have a high probability of about an 82% to get here, and I have settlement and whatever else. So I hope you guys are tracking. Let's go. So market opens, and we're having a wonderful time, and I'm sitting here with my jaw on the table because I'm trying to find an outside edge for rotational trading. So here, right here, let's watch the behavior. So right here, too low, opening swing low, I think we can agree is right at this low, wherever it is. I'm going to mark it. Why would I mark the opening swing low? Because if I'm in two-sided trade, I anticipate what's called an open auction, and I anticipate that the buyers who just came in are going to get, as we say, taken to the proverbial dry cleaners, because these buyers in this leg, and buyers who just think buy, and they might be right, remember. And I also see this up here at yesterday's high, right? So I know this is too high, the ETH high, got some liquidity here, and I got this thing standing in here. 843 contracts. Now, I don't know if that's real, probably not my job. But my job is to think about, I've got sell stops from these buyers, and now what is going to happen if I come back and test them? And of course, no clue. Now, in the microstructure, this is our new retail price. I'm not paying that. I should say, I'm not selling that. It's too low. I'm not selling it to you. Well, here's the new retail price. Buyers and sellers interact, and we move away. New retail price. This is now too low. Watch the process. Now, I call this narration, right? What I'm doing is I'm narrating shopping. Trading is shopping. So if we want to think about this migration of this volume, is that this is what the buyers and sellers are interacting, so it's fair. But since this is developing time frame, if you will, we may find too high at any moment. Let's look. And if I do find too high, then I can fall out the bottom, do anything. Liquidity is in the book. Who knows? VPOC migration, two possibilities. I know, and I always feel kind of, like it can go up or down. And I know you guys in YouTube especially go, well, fine, tell us something we don't know. But If this is too high, this is the language of the participants or the auction. So right here, why didn't this go up? Absorption. No way to know until, and I got this, so I got a couple of pieces, and it's not a short, it's a, well, maybe it's a short, it's subject to your time frame. Absorption, the sellers are below the buyers. Notice when we're going up, buyers are here, sellers are here. We pull back, where are the buyers? There. Buyers are above the sellers. Let's just look at it. Sellers are here, sellers are here, buyers are there, right there. Still going up. Buyers are here, we're above the sellers here, going to the moon. Now what? Sellers are below the buyers. How does that happen? These buyers are absorbed. The passive side, we don't see them. Now we might see an iceberg or we see nothing. Right here, potential change. I come back up. Why didn't the market go up here? It has positive delta. Well, delta's market orders, right? Stops are market orders and initiators. So you got both in there. But what happens if the initiators, if we don't make progress when we initiate, and the sellers are now below the initiators? What does that tell me? Now, right here, I'm going, you're like, sellers are there, sellers are there. Why? Absorption was there. Sellers are below the buyers, and now the sellers are there. You don't see any green bubble, do you? And you don't see us taking out these buyers who were absorbed. I break low. Sellers are here. Sellers are there. Sellers are here. Buyers were there. This sets up a potential triggering structure. Now, it's not a short. I'm just showing it to you, okay? This is too high, retail price. What was too low? Right here. Let's just watch behavior. See it? And where's my support that was too low? It's right there. Now, this is not a short. I'm just saying it's market behavior. You can learn this. So now this for me is not in a location, but it is behavioral. I just hope this makes some sense. Now this is the retail price. This is too low. If I took this short, I've got to get risk neutral because it's counter trend. And I'm not anywhere other than trading order flow and micro auction mechanics as I think of it. So too high. What about this one? You get below it, it becomes resistance. Mid VWAP. This is support, and I got my opening swing low. So if you took this trade, it's extremely aggressive, and it's not a structured trade in TraderLab. It is a interesting, call it behavior to understand. So the idea of learning auction or how the market works is not to take trades like here, unless you've vetted it and you have an edge, but to learn to recognize this behavior. So when it happens at a location, you now put pieces together and there's a confluence. So let's watch. These sellers were absorbed here. Again, no way to know. You notice how the sellers. And where's the last swing? Under here. The buyers were right there. So I take them out, and as far as I know, going to zero, getting into here. And again, it's not my trade. If I come back across here, this trade is done. And you got to be thinking, if we get back over this, big trouble. But this is your resistance. But again, no location. So let's look again. What is this? What happened here? I'm taking you into micro just so you can see some phenomena. What happened over here? Wasn't there absorption? And I got my liquidity here. What happens when I come up here? Why does the market rotate down? You're asking me. And I'm going to say, why? Because the sellers are here. And if I get my buyers here, I got my liquidity. They are not pulling. And why might these buyers get absorbed? Same reason they did. Too high. Sellers are below the buyers. Now, I'm not showing you structured trades. I'm showing you market mechanics. And the idea of this is that if you learn to read this, because this is a foreign language, Remember, I don't use any indicators. I threw them all away because my interest is in understanding what's going on right here. So if I want, which I don't, I could sell this here and enter here with a stop here if it was my trade, which it's not. So let's watch now. Where is my trade, you're going to ask? What happens here? Liquidity. Where is my developing volume point of control? It's here. What is this? If I come outside and I find my sellers and I have range, I can come here. That's called mean reversion. This is my first high probability statistic, this thing. And I have what? Liquidity. You do remember. Let me just check something out here one moment before we get here. Okay. So I have resting liquidity. This is how order flow works. What's going on here? Buyers, 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 right? Buyers. Where are the sellers? There, there, there. And what's happening to those guys? Abuse. What happens over here? I run into the liquidity. Let's look at it. And as far as I can tell, remember, I don't know anything until I know, and that's in hindsight when I'm looking at micro. Buyers are here. I'm above these sellers. Look at the fractals. These are micro structures. I'm above the sellers, which were there. I'm above the sellers. The buyers are here. The sellers are there. And I got buyers. I got buyers here. So as far as I know, this might pull, this might, who knows, right? I have my buyers here. My sellers now are below my buyers. Do you see something familiar? And then my liquidity. I come up into liquidity and zippo. I break low. What does that tell me? My sellers are here. My sellers are here. I have a trigger. Sellers are below the buyers, and the micro structure is right here. Break again. Resistance is right there. So this, depending on your skill, you could be short here, stop there, and you're going for this. And yes, I took this one, and yes, I almost lost my breakfast. Let's look at this. Remember, what happened here? They were absorbed. Sellers. And here's the way I kind of think of it. It's just a rationalization. Why does something happen the way it does? The way I think of it, and I think it's important to connect concepts like why. Now, we don't know if, will it, but we know why it might. Why might this be it? Because the sellers are here. The sellers are here. What happens when we come back? 148 buy stops, really? And the sellers are here. And right here, why did it go down here? Absorption. Look at the volume. If you look down here, I've got volume, but if the market doesn't go anywhere with buy delta, what does that tell you? Sellers are on the other side. So this is a short, this is a short, and you're going here. The market is in something called mean reversion, and that puts everything below us on the table. So this is a short. I narrated this in Trader Lab, and let's look where it comes. Where's that opening swing low? Where's the stops? Under here. Anyway, this is all in Trader Lab, and many traders took this. And now, of course, some traders take stops. Some traders haven't developed the trade yet, and other traders are waiting to take longs. Now, there's more. So this was one. And then look at the change here. Do you think that's a reason to pay attention? Now, I don't want to get too complex in here on you. I want to kind of keep it simple. Let's look what happened here. right here around 14, and I posted this in TraderLab, 13, 14. I'm going to explain concepts here, and this is different than a lot of what I do. As you guys know, I try to mix it up a bit, so this way you don't fall asleep. I always bring multiple concepts into this, so you can understand how to interpret behavior, not predict it. Interpret locations of behavior, and then when the market comes up to it, if you have a plan for it, then you got something to do. If you don't have a plan, you're just working on your crochet, or you're back in your Barca lounger. Hope that makes sense. So sellers, these guys are absorbed. Why didn't it go up? You see the icebergs? Absorption, break. What is this? Remember the high of the day, I had absorption. I have my liquidity. Now let's get into microstructure. And I'm taking you into some advanced concepts. And this is not where you start, but this is where you might say you work on developing an understanding of what you're looking at. And when I stopped using indicators, which was really hard because I spent, I don't even know, 15, so many years, I choose not to think about it. The micro high volume, and this is right here. These are like little auctions. Too high, too low. So absorption, and so you got like buyers and sellers shooting out, shooting across the street at each other here. And whichever side takes control is the way we go. So sellers are in control. Sellers are here. Absorption was there. You can see the iceberg is there, and you can see the liquidity. So it's and then break. Well, if we break, what are we looking for? Lower. I know. Brilliant. And where's our resistance, you say? Right there. Because this absorption was here. So if I come back up to this area, I see the liquidity in the book. It suggests to me maybe a downside rotation. Let's just see what it does. See? So subject to your plan, and there's a little bit more here. This right here is an outside edge. Let me bring this back here for you so we can see it. So this is what you've got. The outside edge is here of the distribution above us. We fell out of it. Now we're doing this kind of a thing. This is your outside edge, too high, down here. And then if we break down, this is your outside edge, right there. So you can kind of look at these, and they're called distributions. What they are really is auctions, because the market rotates, right? And as day traders, we are trading rotations. And even if you're a higher time frame trader, you are trading rotations. It's just as you go up in the quote time frame, rotations get more meaningful. This is an advanced continuation short. And again, I show you trades. It's not trades anybody ought to take. Some of these are very advanced concepts. Notice where we come. This is where the sellers were. Now, again, not trades anybody ought to take. Now, at 9 a.m., we have something called the IB30. So that's going to happen right here. So whatever the low of the first 30 minutes is, which is here, there is a high probability, and you got to vet that. These statistics are in TraderLab. I don't have time to go over all of them, that we take out the first half hour's low. And we have another statistic under us, the ETH low. But what was even more important than that I pointed out? This one. Right? And you know where that came from. And if you are late to the stream, go back and look. Look what's here. Liquidity was here. Sellers are here. Sellers are here. And what do we have here? Outside edge and liquidity. Let's watch the behavior. Now, the other thing you need to know is when you have outside edges, there's going to be buy stops. Write this down. Think like a retail trader. Don't act like one. So what I'm always doing is I'm trying not to do what I did in my development, which is acting like everybody else, and expecting a different outcome. So what I've done is I've taken all my experience and all the tuition I have paid over many, many years, and I said, well, what can I learn from all this? Well, I learned not to do what other traders do. That's the first thing. And then I also learned to anticipate what I used to do. And that is where I would put my stop, because most retail traders, or the gamblers, if you will, are doing the same thing. So they're going to trail their stops over these swings. Well, if I know that, I'm not putting my stop there. I'm going to use their stops at locations. Because if the stops get taken out and then I see icebergs and absorption, I'm going to fade it. And it's not a recommendation. You have to vet this. Let's see what it does. Stops are here. Stops are there, right? And where do we go? Right here. Where's my low volume outside edge? It's right there. This is all posted in TraderLab. Now, I don't call trades because I take stops. You don't need to take my stop. This is a short. And then where are you trying to go? Out the bottom to go here. Now, we have absorption here, which suggests counter rotation. Let's watch it. Now, remember what happened here. Now, these are structured trades, and it might be advanced for you. It's okay. If you're looking at this going, what is going on? You can learn this. I'm not saying you need to or even should want to. But I think it's a function of profitability when the dust settles. Everybody has winning trades. That's not our problem. Actually, it is a problem. I thought having winning trades meant I was on the right track. I just had to make it better. What didn't register with me, because nobody talked about gaming theory when I started in 1980. Nobody was talking about that. It was measured moves and predictions. So, head and shoulders, pennants, flag, all that kind of stuff, triangles. So measured moves. So it was like prediction, wasn't it? So I went on this thing for being right and predicting. Totally wrong. But I didn't know that. So it took me a long time to figure out that, no, that's not the business you're in. What are you doing? Well, okay. I'm in the business of behavior and the auction. What's too high? Well, let me show you why something might be too high. If I'm in value, okay, and I'm leaving this behind, which is an auction, and the fair price is here, and I break away from the fair price, and then I come back up to where the outside edge was of this fair price, which is here, and it's too high, which is here, I can then sell it and look to come back and come out the bottom because of my statistics and potentially come here. So let's look. $14. Short. There. So this is a short and this is a short. Let's come back and look at them. What happens up here? Buy sweep, which is something I really like for potential. And now, we discussed this in TraderLab, this one, because the structure set up for the trade, location, outside edge, and mean reversion, which is what this is outside in trading. Now, remember, the trend is up. Tom, what are you doing? Good question. Liquidity comes in, but this price is too high. Variable, high volume node, right? Let me make sure I got the right level. One never knows. Yes. So this now is too high. I'm not paying that, the shoppers say, and now this shifts down. If this is now the fair price and that's too high, if I come outside, oh, too high. Let's come back to retail. And what's too low? Out here. But I have a high probability of taking this out and getting there. Who knew? Short to there. Trade's over. Now we have another trade. You may like this one, and it's all in the TraderLab. It's called the IB failure. It is now what I've been doing here is trading reversion to an outside edge. What happens if I get to my target down here, which is that 90, whatever it is, that line, and that's the first hour's low. This right there, if you can see that, that's called the IB low. We have a structured trade in Trader Lab called the IB failure. All it is mean reversion. Now, if the trend is up, and this is where things get a little, confusing. Are you fading? This is called responsive selling. Or are you skipping the shorts and waiting for the longs to get back in alignment with the dominant higher time frame going for this stuff up here? You see? What is your plan? You can trade both sides, one side, no sides. It's up to your plan. The thing about Trader Lab is when you come to market, you're not asking yourself what you should do. You already know where it might go and what you will do when an event happens. You also have a trade management plan because you don't know when to get in and when to get out. So you have triggers to get you in at locations that you've vetted. You have trade management, which will take you out because nobody knows where another rotation or where the low of anything is. If you don't know that, you can't solve for it. What you need to solve for is randomness. Anyway, this is the target. And the long, after this, and this was my last trade other than the IBF, which I took for the long. So shorts, and all these were narrated in Trader Lab. Now, I don't call trades. What I found is most valuable and useful for traders is to understand how the market works and then to be anticipating the behavior, not to be predicting it. This sweep suggests counter rotation. So if I counter rotate, where's my location? And where's my stops? Aren't my stops right there above the swing? I'm not going to sell the mid. Are you? I want it to pop. There's my pop. There's my sweep. There's my liquidity. That's my short going for this. I'm just showing you the last trade, okay? Out. Now my next trade, either this goes to zero, which it could, but if I get absorption, location, think real estate, and I come through here, it's called the IBF. I'm now going from reversion trading shorts to reversion trading long back in alignment with the trend. And whatever happens, it's trade management. So let me show you the long. And this is the last trade I took. What do I know? Here it is. Here, let me show you. And now look up for your questions. Hope you're getting something out of this. This is a combination of auction market theory, understanding how the market works, not predicting what it'll do, just understanding what it might do and where it might do it. Now let's look at this. This is something, there's two ways to enter this trade. Target, and for me it was an exit. No, I don't flip the barge around. I don't put a limit order out to reverse. I put a limit order out for targets. And if I didn't have a limit order here, right here is a sweep, and there's absorption happening right here. Buyers are above the sellers. Let's look at the microstructure. Now, microstructure or triggers, there's a couple ways you can do this. You can just exit here and say, hey, that was my trade. It's done. Have a great life. If it goes to zero, there's either other ways back in it, or that's your trade. Your trade's over. So for me, the trade was over here. And then, of course, there's the lunatic under the hood. I call that Hyde, Jekyll and Hyde. That's the judgmental self that goes, because suppose this goes down another 20 points. Here's what's going to happen. In your head, you're going to hear, I should have held it. I knew I shouldn't have got out. Well, no, you don't know that. And what you should do is follow your plan. That's the only way you measure yourself in this business, not what you should have done in hindsight. I'm telling you, everybody is a great trader in hindsight, but we don't live in that. We live in the moment. So that's what a trade plan is about, because you've been here before And you know statistically, based on the behavior, and you got to learn this, that it's possible, possible that this is where the buyers are going to come in, because that's where they came in last time, yesterday, and they were aggressive. If I get the weak longs out, what does the market do? The market goes up to go down, but it goes down to go up. So if I get the weak longs out, and that's called responsive selling, responders, then I'm looking for initiators to continue the trend. Anyway, this sets up a long or a cover out of here. Here's the trigger. I'm going to draw a little something for you. Then maybe we can get into real time. And I still haven't been able to look at your questions, so forgive me, please. I can't see what's going on. This is very important right here. The buyers are here. The buyers are there. This buyer was absorbed. Sellers are there. Let's look. Sellers are there. Sellers are below the buyers there. Sellers are here. The buyers got absorbed right here. I'm going to draw a little box around this thing. Now, this is price action, but what I'm doing is I'm using order flow to help you see what this looks like, because until you understand order flow. So what am I doing here? Order flow, if I understand order flow, I know I have a sweep and absorption. This puts me on alert. Now, it can keep going down. I don't know anything. My sellers are here, my sellers are here, going to zero, and my sellers are here, okay? Support, not known yet. Suspicion, here. Sellers here. They get smacked down. All right, going to zero. But what do I know? This seller is below the buyer. And what happens? Why doesn't this seller go down? Again, no way to know. Buyers are here, buyers are here, buyers are here. No way to know. Break above. This buyer was absorbed by that iceberg. So sellers are here. Sellers are there, sellers are there, sellers are there. I'm taking time because I'm showing you order flow. When my buyers get above my sellers who are there, here, and here, I have a long or an exit, depending on your trade. And then where's the long entry? It can be anywhere along here, and your stop is under here. Not a recommendation. Structured trade. Now, where are we trying to go? Here. This is called mean reversion. This is the long. That's the last trade I took. And where is it going? To the mean. And out here. Into the stops over here. And that's as far as I took my trade, because I got a stream. So I have to bail out of it. Is this making sense? Now, if I was not streaming, where am I going? Variable high volume node. Why would I target this, you're asking? Well, let's go back and look. This is auction market theory. It's shopping. Are you a good shopper? Well, wasn't this too high? I'm not paying that. Really? Well, let's go back and check this store. Nope, I'm out of here. This can be your target, or you're holding for higher targets, which are there. Now I'm current. Questions, and thanks for your patience. I hope you're getting something out of this. I believe if you come to Trader Lab, and it's a belief, it doesn't mean it's appropriate for you, anybody can learn how to trade if they do the work. Doing the work, by the way, is going to take you time. Tony, how are you? Long time no see. How we doing in YouTube, guys? Please use the link in the bottom of YouTube if you're inclined. This is auction market theory using a volume profile as a chassis. You need to vet everything. I've shared 60 structured trades, 60 PDFs of structured trades. The idea of Trader Lab is to actually help you understand how the market works. That it's not an indicator-driven business; it's a participant-based business. Now, let's look at the language. If this is too high, where might we come? I'm not paying that. Let's come back to retail and check it. Well, if that's too high, let's come back to the fair price. And what this is, and this is again, advanced processes, you can learn this. This is either an exit or a short. Back there. This is reversion trading in fractals. Let me get into this a little deeper for you. Think of this as a fair price at this time. And then we left it. And now there's more volume here. So this is the new retail price. This is too high. If the market comes back to a previous location that was too high, it's possible. And we don't know where that is. And there's a little more to this. Do you see this outside edge? That's a low volume node. Let me turn some things on here from Investor RT. I want you to see how there is method and process and consistency in a random environment. Something must be anchored. And most of us load on indicators, and I get it. Believe me, been there, done that. I built systems. Most of us are doing that because we're looking for certainty. Here's what I know. I know out here, let me get it back here, was too low. And I know up here, levels haven't not come in yet. They'll come in a moment. That there's an outside edge up here, and it's yesterday's value area high. What is our trade plan and context for today? Let me bring you back to it. We opened in range inside of value. What do we anticipate? The market is in balance. What do we anticipate again? Likely low conviction rotational day. Are we breaking out of the prior day's value area so far? No, we are still inside. What does that suggest? Rotational trading, outside, in. Let me make sure everything is percolating here. Got to make an adjustment here in Investor RT. Make it more sensitive so I have more levels available for you guys to look at. If you have questions, please post them. I'll do my best. I'm going to come up now for oxygen. How we doing in YouTube, guys? Anthony's, no, it is not wise for you as a beginner to take any shorts. What I would suggest before you take anything is that you know that you have a statistical edge. Buy sweeps here, location, 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 short potential to there. That's all I can tell you. And it's called mean reversion, heavy on the mean. Why would this be a short? If it's, and to answer your question, Athena, is the business of trading is built on plan. We're not interested, at least I'm not, in being a gambler. If you don't have a plan for this condition and taking shorts in this environment, then you just don't take them. If the higher time frame is up, all you would be doing is taking longs. So if the market comes outside, you're kind of coming from this side of it. You see? For me, I can trade reversion trade. Doesn't matter to me. I'll take stops with everybody else. It's like, and look at this. 560 sell icebergs. Why are they sitting at this price? Is it possible it's too high? Now, it doesn't have to be. It can be whatever it is. The outside edge at the current moment is there. And that's where this is. So the market can come back to retail or not. And just because the trend is up. So whenever I put a trade on, my goal is to get risk neutral. Because just like everybody else, I want to manage my emotional state. And the best way for me to do that is to cover my stop on my runner. And I'm assuming a basic two-lock configuration for developing traders. This business is not about making money. If you think it's about making money, it's not. What it is about developing an edge and just executing the edge. The dollars flow to the participants who execute an edge. The participants who are clicking the mouse and playing a game don't have an edge. They're on their way out. And I always say, go to casino, get the cocktails and the ticket to the buffet. Much better, because at least you know you're gambling. This is not a business of indicators and time frames. It's a business of edge. And any of you who've been trading for a while may figure this out. Unfortunately, I'm a very slow learner. And the problem for me early on when I was developing was I had all these winning trades. And I never figured it out that you could have a random buy-sell generator and you don't even know if you're going to buy or sell. Just push a button and you're going to have winning trades. How does that make us a profitable trader, though? It doesn't. It's random. Gamblers in the casinos win. And the cards coming out of the deck are random, and how gamblers play the cards is random. So how do the casinos make money when they have no control over the environment other than how they play the game? That's because they only play games with an edge, and they play them exactly the same way. So if we play blackjack here, and we deal the cards, and we pay the gambler, next time the game shows up, our blackjack, we're going to play it exactly the same way. The only control we have is over what we do, not what anybody else does. And a tweet can come out or somebody trips over the cord at the CME. Anything can happen, and it changes things. Well, if that happens, then, that's what stops are for. Attempt to protect your account. This is a short coming here, and it either does or it doesn't. The name of this is called mean reversion. And then we joke in Trader Lab, yeah, it's mean. Why? Because if this is too high, look at the rationale. And I get my sellers, iceberg, and my stops. Where were my stops? Over these swings and over this. Then I'm coming here, maybe. If I come here, I can then still rotate outside or not. But there's no trades for me at the mid and the VWAP. Why not? Because we're in balance. And when you have the VPOC, which is the highest volume price at the moment, and we have to be careful. If we get more volume up here, this can shift here, and the message would be too low. And then we could start rotating here. So right now, the goal is to try to get back here. If this shifts up, then we have to be, as they say, finger on the eject button, because it might mean this is too low, the same way this is too high. And if this is too high, I can still come back and check what was too low, which is the goal of this trade. And if it doesn't work, you'd be risk neutral, subject to your plan, and then you'd be out. You just go, oh, that's nice. Next. And be sure to get the cocktails and the ticket to the buffet. You guys have questions? Yeah, Johnny, I understand, but you're looking at order flow. So, in fact, you might want to come to the Trader Lab. You can kind of get a sense of pieces. Traders use multiple time frames. Order flow is showing me, where the passive side is. I'm interested in seeing absorption. I need to know or want to know where buy stops are and that icebergs are taking the other side. So I know my sellers are here and these guys were absorbed. This is just the tip of the spear. I have Investor RT going, and I have probably 5 or 6 other charts up for higher time frame as you think of it. By the way, our VPOC just migrated. This is now too low, and now this trade could be over. So now, right here, I'm just going to give you a sense. Right here, if it keeps going up, this trade is over. Thanks for playing. I get the coupon to the buffet if I was short. or I push off of here and come here. That's what I know. Because the market can either push this way because value is moving higher, in other words, the retail price, and that's what it appears it might do, or I can come under here and be sure and come down here and pick some stops. But right now it looks like since value is moving higher, you would need to be very, very, right here, very careful. Micro high volume is sitting here, the VHVN. Let's watch this. And again, this is counter trend, guys, right? Because the trend is up. Now, I'm showing you guys different time frames as you think of them, because there are some traders in TraderLab who would take that long that I narrated earlier, called the IBF, and just sit through all this because the trend is up and we have targets above. This is where your time frame or your trade plan comes into the mix. There's other traders in TraderLab who don't want to participate. They don't want to give this back in case we come all the way around, which we could do. We can come out here or not. This is what you have to solve for if you're in trader, any kind of trader. What is the fractal or time frame you trade? Some traders are going to sell this, come in here. Other traders are going to be long from our last long down here. What is the answer for you? Anyway, Johnny, I hope that you find that helpful. Well, Johnny, I don't know what to tell you. Then you adjust the what you want to see, and it's an individual thing. I mean, if you're using Bookmap, then just look at your own chart. So we're coming across here. That suggests now coming out the top possibly and continuing along. And our target coming up is here and here. 30 was where we were trying to go yesterday, if you remember. You guys have questions? How we doing? Richard from Canada, how you doing up there? Please give a like if you're in YouTube. Subscribe to the channel. There's no cost. If you want to visit TraderLab community, it's a group of like-minded traders who've come together. It's about the business of trading. And I'm not a vendor. There's no cost. And basically, I share my 46 years of experience. And I've, shall we say, culled out what I consider primary trades that you can reverse engineer, and a methodology that might be of some value to you. And it's not for everybody. I find why, if someone asks me why do most traders fail, it's going to be because they don't do the work. They don't understand what FOMO is and why they're in a hurry versus trading with an edge. And ultimately, those traders cannot sustain themselves and they go out of the business. And a personal opinion is that's why there's approximately a 90% or higher failure rate for retail traders. They're just playing a video game. And unfortunately, many of them don't even know it because they don't understand what this business is. It's not a business of being right. How can you be right in a random environment? What you can be is trading with an edge and then develop the confidence in what you do to actually execute the edge and accept the random outcome. That's very counterintuitive for us because we're wired to run away from danger. And what are we doing here? Every moment we put a trade on, it's risk. Outside edge. Still potential to come down here. And now, this is not a trade I would take, and it doesn't mean it won't work. The reason is the trade, the selling in an uptrend is called responsive selling. Weak hands get taken out. then we can stay rotational in here. We are inside of value, or the trend will re-exert itself. We got our weak side out, and other than short time frame rotations, we got this. So, even if you were just long from down here, which was the last long trade, you could just be hanging out with this. And there's some traders in Trader Lab that'll put the long on, leave their stop down here after getting risk neutral, and play the higher statistics in alignment with the trend. Other traders in Trader Lab are going to be trading these rotations. And now, of course, the question becomes, what's the right thing to do? I'm going to say is, what aligns with you psychologically? Are you able to sell this, looking for this? Or once this shifts up, does your plan say, stay out because value is moving higher? You could do anything you want to do as long as you know what you're doing. Counter trend in a higher time frame, support is here and then there. And if we're rotational, the potential is just to be doing this, unless you're higher time frame oriented, and then you're looking for continuation higher. Are you guys tracking? I know it probably sounds a bit contradictory, and the contradiction is your time frame, not mine, yours. So there's some traders in Trader Lab that are selling this, and they're going to look for this, and maybe out here. Other traders are just long. What's the right answer for you? Van, this green line is a high volume node that comes off of as exported. Typically it's yellow, but you can see where it was. And the green lines are marking the high volume nodes, which is there and here. So that's our shopping. This is too high out here. This is previously too high. So this puts this on the map, or not, who knows? Rotational trade, mean reversion trading. So if you're a very active trader, you could be just selling this to here and then see if we can get, because when you're in rotation, it's mean reversion. So it's outside in, and this is the mean. But if I get under there, it's the same to come back and check this, which is the same thing I did when I came up here, was to check this. This is now a variable high volume node. I'm doing something inside, and it can be confusing because I'm combining. I think of them as fractals. You guys think of time frames. There's no time here. And what I mean by no time is structure is a function of participant behavior. I don't look at my watch and go, well, I need 5 minutes. No. What I need is, where do the sellers come in? Where did the sellers come in? Where is my location? That's what I need. And if I see the sellers here, the absorption, which is what I had here, and I have a triggering structure, which is here, I can put a stop here, I can sell this, and I'm going here. Then trade management. Then this is all trade plan specific. Now I have to stress to you guys, this is not mechanical. And most of us are looking for plug and play. All those advertisements and chat rooms, all that stuff you read forever, all the internet gurus say, this is the only thing you need. And they show you an arrow and they show you something that works. Everything works. Everything works randomly. But if it doesn't have an edge, you're going to lose. So let's maybe think about all the times you've gravitated towards the certainty. The only thing you need, trade for 30 minutes and make $100,000 a month, and I'm just, of course, exaggerating, but that's what we all see. I want you to know snake oil's been around as long as there's been snakes. So, at some point, and I call that trapped equity. In other words, we've all done this. I've done it, you've done it, we've all done it. What would you have paid to be able to have an edge? anything. Well, so you pay, you get indicators, you get this, you get that, and you start piling them in to create more certainty. That's actually potentially the reason you're not going to succeed in this business. Because what you've done is you have random inputs in a random environment. That would be the same as the blackjack dealer changing the number of cards on each hand to keep it interesting. How can you have an edge when you can't measure it? Remember where our target was? This. So if you took this trade, you could right here scale or be out of it. It's a scalp. And then if I get below, now here's your absorption. This is sweep. So that says counter rotation right here. So right here, I have to get under this to come out here, low volume, which is out here. So the target on this trade is from here to here to there. And that's what's called mean reversion. Now, if I can't get below this, then it's a price check and it's like, no, that's still too low. And we come back here. If I get below here, I come out there. Right there, where it says LVN, out in this area. Okay? Question. This is the Trader Lab. Johnny, there's a link in the bottom of YouTube if you want to visit the Trader Lab community. There's no cost for it. Yeah, it does. CMJ's asking about the different sweeps. For me, I want to see a buy sweep up the top and a sell sweep down here. If I see a sell sweep, I anticipate a counter rotation, but it doesn't have to. I want to watch this very carefully. Notice here there was a sell sweep and it gave me the rotation. So if I'm sitting in a trade, when I see these sweeps, I'm paying a lot of attention because I know I'm at a location that's now retail, and I know this is too high. So what I found was too high, VHVN, back to what was too low, VHVN, and right here, I can either do this because I have absorption going on right here, and if I break below it, then I'm coming out here. That's the trade. I don't know, what it'll do. In fact, the IB low is where the stops are going to be, so my target would be down here for this. Now, this might not be anybody's trade. Not saying it should be. The idea of Trader Lab is to help you understand market mechanics. Then you can, it's almost like slicing it into the fractal or rotational rotations you need. I trade this kind of thing all day. And I don't like to be active, I have to tell you. I like to put a trade on, get my 10, 20 points or whatever the market offers, and then, do a couple of those a day, and then sit in my Barca Lounger. Or if I'm in this context or condition, then I'm just going to trade the rotations. It's harder to do because it's easy to get picked off. So you got to be more familiar with reversion trading. It's a separate plan. So how do you trade reversion in an uptrend, right? Well, you can just take the long side and skip the shorts. Use the shorts for trade management, see? Or trade both sides and know that you're on the weak side if you're taking the shorts. But what else do we know? The market's long. What does the market do? The market goes up, go down. Market goes down, go up. What do I know? There was absorption here. My buyers were here. This right here could be my outside edge. There's my sweep. I have to always look left. Sellers were there. Buyers took control. If the sellers were run over here, what does that make this? Think about it. And what is it saying right now? Might it be time maybe to be out of the short? Location, absorption, that's absorb, sweep. What does the sell sweep CMJ say? And buy icebergs and sell stops. Potential for rotation. That's all I know about it. So if I think the trend is up and I take counter trend trades, which is subject to my plan, if I absolutely have an edge to be fading this, then I'm only trading there to there. and then trail. And if it comes back across, exit stage left, and I put a few burgers on the table. But this is a 10-point rotation. I can handle that. Does that make sense? JJ? Johnny, I don't find scalping to be less risk. I find for me, and I'm not only talking about me, I'm sure there's many people who do it much better than I do because I'm not a scalper. I have no interest in it. I have to have a trigger, and my stops tend to run around 3 points in the current volatility. So if I run a 2-lot minimum because I'm going here, I need to cover my 3-point risk, and then I am going here. I could be done with the trade here. It doesn't matter to me. I'm just going bing, bang. So I don't know if we call that scalping. For me, it's 10 points. So it has to fit for me, risk reward. So I'm not, again, what is a scalp? For some traders, a 5-point rotation or 6-point rotation is a scalp. Or an 8-point rotation because of their time frame. Scalp is really a definition in the eyes of the beholder. So for me, a 10-point rotation is not a scalp. It's what I'm trading for because that's the condition of the market. So I'm just trading in. But when traders come to Trader Lab, I always suggest, and many traders won't do this, and it's one of the reasons they might not succeed. In fact, was Friday's webinar, and I don't know if any of you guys, maybe Stephen, if you're in here, or even Dan, that link says, I think, stop gambling, start winning. It really addresses the issue as far as the difference between gamblers and developing professional traders. And what you got to do, in my opinion, again, it's just my opinion. But I've traded quite a few traders over the years. Assuming as far as, in fact, can somebody post that in here? Can somebody go back and grab that link? It was posted on Friday, this past Friday. So if you can go back in the Discord chat and just post that thing in YouTube and just put in there what it is, I'd appreciate that. Can somebody do that? Be very much appreciated. Please give a like if you're visiting in YouTube. If you guys are interested in Trader Lab, there's no cost for it. So this is, the thing about this is the auction, and I'm trading in, as you think of, multiple time frames. There's no time here. The auction is a pricing mechanism. This is why we have a market. What's too high? What's too low? What's fair? Well, this was too high. That's why we left it. If I come back to, and this is kind of a concept like support and resistance, but I'm not using your typical support and resistance. I'm using auction because the auction is the truth of the market, not a line on a chart. This is created by the behavior. When I come up here, this is the micro high volume. Let me show this to you. I'm going to go into something called a fractal. Now, before you fall out off your chair and think, what is a fractal? All it is an auction. Sellers are there, and the buyers, how do I know the buyers are here? Because this seller got absorbed. Buyers, sellers, seller, buyer. Right here, no clue. But what happens in here? There's the high volume in right here. Let me show you. I don't want that on the chart. I just want to isolate this. This is how you can use Bookmap. Now, let's come back here. Right here is high volume. It is a fractal of what this is. This is a previous high volume location for the whole day. and this thing moves around. What's this worth? I'm not paying that. Let's leave. How about down here? You're out of your mind, and it goes around. If I come back to a previous location that the market said is too high, and my retail price is below me, and I know I'm in value, in range, even though the market's bullish, currently I'm in a mean reversion configuration, only outside in, unless you're a higher time frame position trader, you see? So as a day trader, I know I'm inside of something that's bullish. I also know at the moment it's rotational. So right here, location, 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 I find my seller, there's my icebergs, and I don't know until I am below my buyers, and this creates a trigger. Watch. So now my buyers were here, and I know my sellers are here. My sellers are below my buyers, who were right there. Retail price in the developing higher time frame, and in this fractal, this auction, the high volume is right there. It operates the same way, but I'm going down in time frame, whereas you guys think of them as Matryoshka dolls. This sets up my short. So let's look. Well, there you go. And where are we trying to go? Here. And then either we're going to come back here or we're going to continue. And where's my target down here? Wasn't it out here? Well, there's one down here. This one is stale, so no good. Let's get rid of that thing. And then the possibility to come out here or back here, and then the trade would be over. This is not scalping for me. 10 points is, I don't know, maybe it is a scalp. Not for me. How we doing, guys? Please give a like if you're in YouTube. Subscribe to the channel. And did somebody post that link for me? Oh, thank you, Stephen. Friday's stream. Thank you, thank you. Right now, if you look in YouTube, you'll see a link. It says Friday's stream. It's about stop gambling, start winning. You might relate to this because we all start out as gamblers because we have no clue. It's not your fault. I mean, you get a software package that has 100 or 200 indicators in it. For this very astute audience, why do you think there's 200? Have you ever thought maybe you don't need 200? Maybe you just need something that works. You could spend your time and half your life, multiple indicators, multiple time frames, and have nothing but noise and randomness, and everything wins because it's random. The only way, in my opinion, in my experience, to have the potential to sustain yourself and actually build a business is to know where you trade, where you don't trade, and where your edge might be. Just saying. By the way, let me show you Trader Lab, just so you know what this community looks like, if I can get it over here. That is the whoa. The scale and then out the bottom. Don't know where that came from. So this is what the Trader Lab looks like. Community of traders. It's available for everyone. There's a lot going on. Mutual support. It takes a community. Now, this is something I put together based on how the market opens, what you can anticipate, and then certain trades are qualified. They have to be aligned with the condition. If the condition of the market changes, those trades don't work. They're not qualified. They don't have an edge. Do you know the difference? And do you know how to know and define change? If not, you're doing a plug and play, one size fits all, and that's not the way this works. So there's a lot happening in here. Thanks everybody for participating in Trader Lab. There's also a library of webinars. You should start with the primer one. Ned, thanks for taking care of this for us. This is about an hour long. It's a high-level overview. It talks about the process and using anchored inputs, not variable inputs. The market's random. Something needs to be anchored or else you can't measure it. Also, meet the Trader Lab. By the way, this one, the primer, I don't know if I mentioned, it's about 32,000 views. Meet the Trader Lab. This is the Trader Lab's advanced trader education and process. You can learn this. I believe anyone who comes to Trader Lab and does the work has the opportunity to create a business model. But if you don't do the work, then I would say the odds of sustainability based on typical retail trader outcomes is substantially low. And then here's just an example of a day: the plan, the trades, and taking the trades. And then, are you a trader or gambler? Ned, I think we should replace trader or gambler with the one that we just posted in there. Day trading, why most traders using indicators fail. And then trapped in trader Groundhog Day, winning trades, trying to make it better, waking up in the same place. Kind of where I was for many, many years. And I kind of figured out maybe that's not a good place to stay. I could never figure it out. Structured trade, targeting. Now, noise. Now, is this something you would do? Would you say, I can trade this to this and be done? Take 10 points? Is that your scalp? Or, subject to your plan, if we can get below here, then we can go lower and stay in two-sided trade. This is the question. You are the one who creates the answer. I can't give you the answer for you. Remember, there's some traders who are long off that IB low, which was the last long I took, and they're hanging out. I'm thinking of Rod, who's in the Trader Lab. He's in a Barca Lounger. And he'd be long from out here looking for the top, possibly. I can't speak for him. Or maybe you took the long to squeeze and then come across and take the short to come back. That's where your trade plan and time frame comes in. That's really what this business is about. Hope you're getting something out of this, guys. Join the Trader Lab. All you got to do is verify your Discord email so it keeps the spam and the riffraff out. Trader Lab's a professional community. It's not romper room. I'm sure you've been in a few of those. So that's not what's going on. If you find this interesting and you want to explore it further, there's that library of webinars, there's the Trader Lab community, and it's available to everyone at no cost. Thanks, guys. Appreciate you stopping by the Trader Lab today. Don't forget the like on the way out. Grab the link that's up there in YouTube about stop gambling, start winning. I think that's something everybody ought to watch. It'll kind of give you an idea of what you might want to consider if what you're doing isn't working for you. And random winnings are not the path to success, in my opinion. It's only one way that I have found, and that is having a statistical edge, just like the casinos do, and only playing the games that have an edge and leave the gambling to the gamblers. Thanks again, guys. Thanks for visiting Trader Lab, and I look forward to seeing you soon. Thanks.